Okay, so Forex day trading. It's, oh, well, it's got to be one of the more, I don't know, intimidating but also exciting corners of the financial world,
Oh,
right?
yeah,
I mean, we're talking
definitely.
about trillions, trillions with a T, changing hands every single day.
Every single day, yeah. And it's not just the sheer volume, it's the fact that it's happening 245. This market never sleeps.
Right. Driven by everything from like global news events to, I swear, someone's, tweets.
Absolutely. It's incredible how sensitive it can be. But you know what's really fascinating, even with all these factors, is that there are people who figured out how to navigate
That's
this.
what we're here to unpack, right?
Exactly. And day traders, they're particularly drawn to Forex because, well, think about it, even the smallest price fluctuation can turn a profit. And with leverage, those gains, well, those can be magnified.
Leverage. Okay, so that's where things get really interesting and risky, I imagine. But hold on, before we get too deep into the weeds here, for anyone listening who's maybe thinking, wait, back up. What even is Forex?
Right. So Forex is just short for foreign exchange, the market where different currencies are traded against each other. You know, like when you travel and you have to exchange your dollars for euros or pounds.
Yeah, yeah.
It's essentially the same principle, just on a much larger scale.
Okay, so instead of a couple $100 for a vacation, we're talking about what? Banks, businesses, moving millions, billions.
Oh, at least. And the speed at which these transactions happen, especially in day trading, it's mind-boggling.
So day traders aren't like long-term investors then.
No, no, not at all. They're all about those quick trades, in and out, sometimes holding a position for just minutes, trying to ride these, well, even the tiniest market movements to make a profit.
Man, that sounds intense. Like the financial equivalent of, I don't know, some kind of video game with like crazy fast reflexes required.
You're not wrong.
No time to hesitate when every second counts. So how do these day traders even begin to make sense of it all? What strategies do they use?
Well, there are a few classic approaches, time-tested, you could say, but it's important to remember. None of them are foolproof. One that's pretty common is called scalping. Imagine a hummingbird, right, flitting between flowers, taking just a tiny, tiny sip from each one.
Okay, I'm picturing it.
Scalpers, they're aiming to make small profits off a large number of these very quick trades.
So it's all about speed and volume, like a hummingbird on a mission.
Exactly.
But what about traders who are, I don't know, maybe want a slightly less frenetic pace?
Right, so that's where something called range trading comes in. Picture a tennis ball bouncing between two walls. That's your currency pair fluctuating within a certain price range.
Got it.
Range traders aim to buy low at the bottom of that range and then sell high when it hits the top.
Okay, so it's about recognizing those patterns and then timing your trades just right. Makes sense. But then there are those who are drawn to, let's be honest, a little more of the unpredictable side of Forex, right?
Ah, you're thinking about breakout trading. Imagine a dam suddenly bursting. That's kind of the dramatic price movement breakout traders are looking for.
Wow.
They're trying to capitalize on those moments when a currency pair breaks out of its established trading range. It creates this surge of volatility and, of course, potential profit.
That does sound exhilarating and terrifying, honestly, like a high risk, high reward kind of thing, especially if you aren't prepared for that kind of sudden like momentum shift.
For sure.
Which brings us to something that's absolutely crucial for all-day trading strategies: risk management.
Couldn't agree more. You could have, I don't know, most sophisticated trading strategies in the world, but if you're not managing risk, you're setting yourself up for potential disaster.
It's like you need that safety net no matter how skilled you think you are.
Exactly, exactly. And it all starts with, well, it might seem kind of obvious, but having a solid trading plan.
Okay, so like not just winging it.
Definitely not. Think of your trading plan like, I don't know, a roadmap.
Okay, I like that. A roadmap.
Yeah, it should lay out things like your entry and exit points for trades, how much you're willing to risk on each one, your profit targets, that sort of thing.
So having that roadmap, that plan, that can help keep you grounded when things get a little, heated in the market.
Oh, without a doubt. Especially when emotions come into play, which, let's be honest, they always do. And that actually reminds me, you mentioned the 1-2% rule earlier.
Right, right. It's in those materials I sent over, yeah.
Well, that rule, it's not just some arbitrary thing. It's huge, really, for managing risk. Basically, you never want to risk more than 1-2% of your total trading capital, your whole account, on any single trade.
Okay, so like, let's say you've got, I don't know, $5,000 in your trading account.
Right. So with the 1-2% rule, the absolute most you'd risk on any given trade would be what, like $50 to $100?
Which, in the grand scheme of things, isn't that much.
Exactly. That's the whole point. That way, even if you hit a rough patch, have a few losing trades in a row, you're not wiping out your entire account.
It's about staying in the game, playing the long game, not just chasing those, like, quick thrills.
100%. It's about discipline, thinking long term.
Absolutely. And speaking of things that can really throw a wrench in even the most well-thought-out plans, emotions.
Oh, tell me about it.
I mean, fear, greed, those are powerful forces, right?
No kidding. And they can completely mess with the trader's head, lead to some seriously bad decisions.
I can only imagine. How do those emotions, how do they actually show up in the trading world? And like, what can you do to not let them completely cloud your judgment?
Well, let's take fear, for example. Fear might make you hesitate, you know? You see what could be a great opportunity, all the signs are there, but you're too scared to pull the trigger. You miss out.
Right, right.
Greed, on the other hand, that can lead you down a dangerous path. Chasing losses, holding on to a losing trade for way too long, hoping it'll magically turn around, or taking on way too much risk because you're chasing those huge, unrealistic profits.
It's like fear keeps you safe, maybe too safe sometimes, right?
Mm.
But greed just pushes you over the edge.
It really does.
So how do you, as a trader, keep a cool head with all that's going on, with all those numbers constantly moving on your screen? Are there like tools or something that can help with that?
That's the million-dollar question, right? Well, first things first, you got to have a good trading platform. Think of it like your command center, your home base.
Okay.
It needs to give you real-time market data, charting tools to visualize those price movements, and of course, a way to execute trades quickly and reliably.
So like speed and efficiency are key here.
Absolutely. Now, in terms of specific platforms, two of the most popular ones out there are MetaTrader 4 and MetaTrader 5, MT4 and MT5 for short. Tons of traders use them. Really user-friendly, packed with features.
And those are good for both beginners and like more seasoned traders.
Yep, they've got something for everyone. Another good one is CTrader. It's really well designed, super intuitive, and known for its advanced charting capabilities.
Nice. So you've got your, what did you call it? Command center, your platform. What else? What other tools are out there to help you stay on top of things in Forex?
Well, you absolutely cannot forget about a good economic calendar.
Oh, right. Right. That's like checking the weather before you leave the house.
Exactly. Except instead of rain or shine, you're looking at things like, interest rate decisions, inflation reports, central bank announcements, that sort of thing.
Stuff that can really move the markets.
Oh, for sure. Knowing that those events are coming up, it lets you prepare, adjust your strategy instead of being caught off guard.
Proactive, not reactive.
Exactly.
Okay, this is all making sense. But we've talked about platforms, calendars. What about those of us who are, let's say, visual learners? Anything for the folks who like to, see those trends and patterns maybe laid out a little more visually?
Absolutely, yeah. Charting software is huge for that, especially for traders who rely on technical analysis.
Technical analysis.
Yeah, it's basically the art of studying past price movements to try and identify potential future trends.
Okay, so like looking for clues in the charts.
Exactly.
Yeah.
And these charting software programs that give you a much more detailed view of everything. You can zoom in, you can draw trend lines, use different indicators, all sorts of stuff.
Feels pretty high tech. So it seems like day trading, it's not just one thing, right? It's this blend of like analytical skills, maybe a bit of intuition, and then being able to, I don't know, read those subtle cues in the market.
It's an art and a science, definitely.
It really is. And from what we've talked about, it seems like it takes time, practice. You don't just become a Forex whiz overnight.
Not quite.
It's a journey, not a destination, right? Always something new to learn in Forex. But let's address the elephant in the room here.
Yeah.
We've talked about strategies, tools, risk management, all that.
Hmm.
But what about like the reality of Forex day trading? It's not always pretty, is it?
You're right. It's not. The truth is a lot of new traders, especially those who come in, with those, what do you call them, rose-colored glasses,
Oh, yeah.
thinking they're going to get rich quick.
Right.
They end up losing money, at least at first.
And that's the thing, right? It's that initial, I don't know, that allure of easy money that can really trip people up.
It really can.
So what contributes to that? Is it just a lack of understanding the technical stuff?
Yeah.
Or is there something more to it?
Well, knowing the technical side, sure, that's important. But honestly, A lot of times it's lack of discipline, letting emotions get the best of you.
Right, right.
It's so easy to get caught up in the moment, to chase losses or get greedy and make, bad call after bad call.
It's that fear and greed cycle, isn't
And
it?
exactly. And it's a recipe for disaster in Forex.
Mm.
The thing is, day trading, it's a skill, just